Hey, Doug Goldstein here with the Goldstein on Gelt show. You know what a stock trader's favorite movie is? Frozen. Because sometimes they just need a reminder to let it go when they're holding on to a losing stock. Okay, there's my Disney joke for the day. It's really, really important to be happy when dealing with investments. I know this sounds a little bit crazy, and I'm not that kind of guy who's all touchy feely, but I need to share with you some very, very important facts regarding behavioral finance. Behavioral finance is such an important topic. People have literally won a Nobel Prize on the topic. In fact, maybe you saw Daniel Kahneman, who won the Nobel Prize in economics, more than once as a guest on the Goldstein on Gelt show talking about it. I want to distill some of the information for you so that ultimately you will be a much happier investor. And why is that important? Because I think you'll be a better investor and you will certainly have a lot less stress. If any of this is concerning to you, or at the end of today's presentation you're wondering, how do I really do this? You need a little help, you can always contact me at my corporate website for a free cross-border financial evaluation. Just go to profile-financial.com/call, and we'll set up a call where you'll tell us about your situation and we'll see if and how we can actually help you out. But the way that I really want to help you out today is to give you a huge amount of understanding, starting with the root causes of the unhappiness people have in dealing with their investments. Let me give you a few examples, and probably as I'm talking about this, you'll go, yeah, that's me, or I know someone like that, or that could be me, and that's what's making me miserable. And in a few minutes, I'm going to tell you how the psychology of being miserable really does make you a bad investor. So here's an example. Analysis paralysis. Maybe you've heard that. You just have way too many choices. Now, I work mostly with people who live in Israel, who have U.S. brokerage and IRA accounts, so they have like twice as many choices. Some people live in one country and they can choose the investments there, but when someone makes aliyah, when someone moves to Israel, all of a sudden he says, wait a second, maybe I can invest in Israel. And they have stocks and bonds and funds and real estate and all sorts of things that he can buy in Israel. At the same time, he can buy those same investments in America. And what frequently happens is that people suffer from analysis paralysis. So much to think about, they can't even think about anything, and they end up doing nothing, which in and of itself is a decision. If you keep your money in a checking account earning 0%, well, that actually is a decision that's probably a pretty poor decision. Another problem people have, and I can tell you certainly with some of my kids, is FOMO. Maybe you've heard of this, FOMO, fear of missing out. People are constantly chasing performance. They hear of a great story. Again, this happens a lot in Israel because there are several, not millions, but several people, I'm using that term in a minimalistic way, who've made a lot of money by investing in a startup or something cool. And they get a lot of press and people hear about it, and those other people have fear of missing out. And so they want to get into the game. So they put a lot of money into something that's high risk because they figure, oh, well, that guy made money, I can make money too. And that's a huge problem. Another issue is this overemphasis that people have on short-term volatility. Markets are always volatile in the short term. This is the nature of markets. But what happens if you focus on it? All of a sudden, you react much more emotionally to what's going on. You're thinking about it. There's something in the news. The president said that. The prime minister this. America, Europe, South Africa, whatever it is, makes people act emotionally, and then they do a really poor job investing. And the last point I want to make on this section is the complexity that people often feel is surrounding them, in particular with cross-border investors. When I meet with a new couple, a lot of times, they're just so overwhelmed. They say, Doug, I had a brokerage account in America, but the brokerage firm kicked me out, and they said it was for regulatory reasons, and I don't understand. And now I'm coming to Israel, and the bank says to me when I want to wire money from my American bank account into my Israeli account, they treat me like I'm a criminal, and I don't know why. The complexity of being a cross-border investor can be something that really makes expatriates, makes Olim, people who've moved to Israel, freeze and unable to do anything. I guess that goes back to my original Frozen joke. Let it go, let it go. We need to let go of this stress. So I'd like to dive in now to the psychological aspect of investing, and I'm hoping that I'm going to share with you a number of points that come up a lot, and why just by having the knowledge you're going to have today, you will become a better investor. A lot of the cognitive biases that people have will, like we discussed before, a few others. In fact, what Daniel Kahneman spoke to me about on the Goldstein on Gelt show was overconfidence. All too often, people are overconfident, which is shocking because on average, people are pretty poor investors, but they think they know. They feel something. They go, well, electric vehicles or climate change, and they've heard these things so many times, they feel they become experts, and they'll invest following that route, and they really have no expertise. They have no right to be overconfident, and yet they are, and they make bad decisions. And then there's the other side, which is what we call loss aversion, another famous behavioral finance concept. Loss aversion is people are much more afraid of losing money than they are looking forward to making money. If you do a study of someone and you say, listen, would you flip a coin and the odds of losing are less than winning, let's say that was a special coin, would you do it? And most people say, no, I can't stand the thought of losing. They have loss aversion. Once you're so afraid to lose, you can never invest because all investments have risk. So what happens when you try to do this and you get totally stressed out about what's going on? This stress that you have is going to have a huge impact on your financial decisions. There's a biology, by the way. There's something actually biological that happens here. People have the fight or flight response. How does the brain act when it's afraid, right? When you fear about, oh my gosh, I'm going to lose my money, all of a sudden the caveman in you comes out and says, I will not be able to have to bring home food for my family and we will all suffer and die. Okay, so that kind of fear is obviously going to make you invest in one way. The opposite. Maybe you'll get the fight response and you're saying, you have this heightened sense of alertness, right? You're looking around and every single thing that you see seems to give you an indication of what might happen or what you have to do. And so you buy and you sell and you trade, and people who trade too much, in most cases, lose money. In fact, a while ago I saw there was a proposal from the SEC, the Securities and Exchange Commission that oversees the markets. They said we should put a label on day trading similar to the label they put on cigarettes that says this could be dangerous for your financial health. When you're suffering from this kind of stress, it literally can impair your cognitive functions. You're not able to think clearly. Maybe you've noticed this. They talk about people who they get angry and they see red. That means they're not seeing what's in front of them. So if you're angry about what's going on, you're not going to make a good decision. Your memory gets worse, your attention gets worse, your concentration gets worse, your executive function gets worse. Everything gets worse when you're stressed out. And therefore, you need to find ways of not engaging in this short-term, long-term stress problem, because when you're stressed out, you're going to be thinking only of the short term. And as hopefully we all know, it's the long-term investors who do much better than the short-term investors. So I'd like to encourage you to begin to think about ways that you can control your stress. In fact, at the end, I'm going to give you a few tricks that I tell my clients, and I hope that's going to help you out. Okay, there are a few specific considerations that I want to give for cross-border investors. One of them is that one of the main stresses I see that my clients have is they're very, very worried about taxes. Now, I'm not a tax advisor. I'm the investment guy, and I think that after they speak to me, they feel much, much, much more calm. But they're still dealing with their taxes. And what I'd like to suggest is that the way to deal with that is with an accountant who actually takes the time to explain things to you. At the end of the day, hopefully, you'll have taxes to pay because that means you made some money. But you need someone to explain to you why and how much, and to give you and to manage your expectations. So when you're interviewing accountants, ask them, how often will you meet with me? Will you just send me the return to sign? And you may say, I don't want anything to do with it. I just want them to take care of everything. Very nice. But that's which is fine. Let them handle all the technical details. But you need to be involved in the emotional side, in the conversations, so you know what's going on. Accountants don't do the same thing financial advisors do, which is talk about your dreams and your goals and try to help you achieve those goals. The accountants hopefully are trying to keep you out of jail by making sure that you file your tax return correctly. But that's a lot of stress. Seriously, knowing that you are on the border all the time of doing something illegal or legal because of the way the tax form is filled out, of course that's going to give you more stress. The way to alleviate that stress is through communication with your accountant. And if you're not getting that from your accountant, time to switch accountants. The next thing that is a special issue, a special consideration for cross-border advisors, is the issue of cultural differences in investment philosophies. I will tell you, having spoken to Israeli bankers and Israeli investors, it is just a different culture. For a long time, I used to teach at the Israeli banks. I helped them to set up their financial planning systems. And I remember at the end of giving a whole course about how to do financial plans, which was funny because I was teaching the private bankers from one of Israel's biggest banks. I taught them all the importance, all the steps, how to communicate with clients, how to build the plan, how to present the plan to the clients. One of the bankers came to me. He said, Doug, this is fantastic. This is a great idea. Everyone should do it, but I'm never going to do it. I said, what do you mean? He said, it's just not the way we do things here in Israel. And maybe if you've ever walked into an Israeli bank as an American, you may say, I don't feel welcome here. It's not that they're bad people. They're perfectly nice people. You just don't feel like you're in the right spot. And that, in and of itself, creates stress, makes you feel you have to act quickly, fight or flight, and there's a lot of fighting you might have. You'll argue. You don't want that experience when you're dealing with one of your most precious assets, which is your wealth. Not the most precious, but one of them. And the other thing I think a lot of cross-border investment people who are living in Israel and investing in America, or whatever your cross-border situation is, people like that really need to build a support network of professionals. So that's your investment advisor, your accountant, and your lawyer for starters. Maybe if you have an insurance person or a pension advisor, those are people who can help out as well. But make sure that you have a great support network to help you out. Okay, so like I said, I want to give some actionable steps for what you can do when you want to get happy again in terms of your investment. So I'm going to call this the happiness algorithm. These are, I don't know if it's really it's not a formula per se, but it's the steps that everyone really needs to take. So number one of the 6 strategies for happier investment decisions. Number 1, simplification and focus. It's much easier when you're living in Israel to make sure your assets in America are consolidated. Earlier today, I sat with a couple. They had 4 different banks and brokerage firms they were working with in America. I kept saying, well, what's in here and what's in there? And they couldn't get their hands around it. He said, oh, I pay my bills from that one. Oh, no, maybe from that one. And his wife said, no, I'm sure that we have $600,000 in the checking account. This conversation was, I'm very patient, but would drive anyone crazy because they didn't know what they had. They didn't simplify, the opposite. They were all over the place. So you want to consolidate your assets into FDIC insured banks or brokerage firms that are insured by the SIPC, and bring it all together so it's simple to know what's going on. Then you can focus. You know what focus stands for? FOCUS. Follow one course until success. Follow one course until success. That's what you need to do. Focus exactly on what you're trying to do. This is going to help. Simplifying and focusing on your assets will make you a better cross-border investor and will absolutely lower your stress. The next thing is what your grandmother always told you, is to diversify. How often have I seen people come in and it's like, in fact, this couple had money in multiple places, but in one place they had over $1.5 million in one stock. It was a very good stock, or it had been a very good stock, and a big player in the high-tech world. I'm happy for them on the one hand. On the other hand, they were so stressed that something would happen. They said, well, what if another company comes up and competes with it? And, in the world of AI, for example, we're seeing a lot of new stuff and a lot of new competition to the stalwarts of the industry. All of a sudden, they're saying, wait a second, maybe someone's going to come and take over our business in a matter of weeks. So now imagine you have $1.5 million in one stock. Think of the stress as a result of that. Now, there may be reasons to do it, tax reasons, investment reasons, but absolutely you have to realize the amount of stress non-diversification is going to cause you. Next is to have a plan. Like anything, if you know where you're going, if you're managing your expectations, you may have found this if you're married, right? You speak to your spouse, I'm a husband, so I speak to my wife. If we have a plan about what's going on, we're going to go to dinner, then we're going to go out to a show, she feels much better. She enjoys the evening more. In fact, it's a little bit of a joke between the two of us, but I understand her. Sometimes when she's reading a really stressful book, she'll cut to the end to see what happens, which drives me crazy, but I understand because she wants to lower the stress so that she can enjoy the ride. I think that's the same. If you can have a good financial plan and know what's happening going forward, what are you going to do? You're going to be more relaxed. You'll be able to make better decisions all along the way. Okay, here's a little bit of the psychology that I'll talk about, but you need to build a resilient mindset. If you're not the type of person, if you're just a panicky, nervous person, fine, I'm not going to tell you can't be that, but it'll certainly help you if you do some of the techniques that many people have advised to lower internal stress, like meditation, stress management techniques, physical exercise. Make sure before you're getting involved in dealing with your finances, or if you're in the middle of dealing with your finances and it's stressing you out, take a break. Have a healthy drink. Not alcohol, right? A cup of tea. Remain calm and focused. Go for a walk outside. All of these things can slow you down and make you make smarter decisions. I've been in the Wall Street business for over 30 years. It's almost never that something is so stressful we have to make a decision right now. Of course, there are people who trade that way, and I don't believe in that. I believe in helping my clients set themselves up so that the decisions can be made in a carefully considered fashion, slow but steady. No, I never call a client and say, quick, make a decision, buy or sell. That'll never happen. You need to make smart decisions by making sure you're working with people who are calm and relaxed and who keep you calm and relaxed. Okay, next is you want to have a systematic decision-making process. What does that mean? It means that the way you're going to make decisions in the big picture will be based on, for example, your asset allocation. You don't want to be in a position where every time you're deciding, you say, oh, should I put $100,000 there or there? You want to say, for example, my overall allocation is 60-40. This is not a recommendation, just an example. I want 60% of my portfolio in the stock market and 40% of my portfolio in safer investments like bonds or bank deposits, all of which have their own risks, just for the record. So maybe that's your decision. Now you've already started to build the system. What do I mean? If someone comes along and says, hey, why don't you put $250,000 into this such and such a stock, you know that, well, you're going to take it only from the 60% of the portfolio. You're not going to all of a sudden change your overall allocation. Why? Because that is a core belief that you have about your portfolio. You've got some ground rules that have set. Now you may say, okay, I prefer to move $250,000 from this manager to that manager, or this index fund to that fund. Fine, but at least you're working within a framework. And you or your advisor should help you to develop and maintain and stick to that framework. Okay, next. Educate yourself. If you have listened so far to this episode of the Goldstein on Gelt show, thank you very much. I hope you've learned something. There's so much more information that's available, first of all, on the Goldstein on Gelt website, in my day job at the profile-financial.com website. Just by learning more, you're going to feel that when you have conversations with people or with your advisors, you know what they're talking about. It's not all jargon and Greek to you. It's something that makes sense and will allow you, again, you don't have to be a brilliant investor. You just have to be someone who's calm, who can listen to the choices, understand how much risk you are willing to take and want to take, and understand what your goals are. Then you'll make smart decisions. But you have to know something, right? And again, thank you for listening this far. If you feel, I think I mentioned at the beginning, if you feel that you're in the right place and you just want to get an evaluation of how we can work together, you can always get a free cross-border financial evaluation by going to my website at profile-financial.com/call. And in that discussion, we'll determine whether and how we are a good match to work together. Okay, beyond a free cross-border financial evaluation, I just want to give you 2 more points in terms of lowering your stress, what I refer to as the 6 strategies for happier investment decisions. So next one is set realistic expectations. It drives me crazy when interest rates are 2 or 3 or 4 or 5%, and someone calls and says, or writes me an email, even worse, Doug, can you guarantee 15% per year? And that's like the whole letter. This is nuts, right? Have realistic expectations. There's a real world and a fantasy world in the world of investing. If you want to live in the fantasy world or read the ads of people or go to people who promise you returns that are not commensurate with what's going on in the market, good luck to you. But that's not okay. And you will regularly be disappointed. And of course, that's going to increase your stress. It'll make you angry. It'll make you nervous. And then you'll make more bad decisions. So part of education at the previous point was learn what's going on in the markets and what risk really means and what the possibilities are. Okay, the last point, which I think a critical takeaway, and I've written about this on many occasions. You can see articles I've written on this topic, but how do you choose a good advisor? So I'm going to leave you with this point, which is choose a good advisor. Choose someone who spends much, much, much more time getting to know you rather than telling you about him. Right? If he's telling you about him the whole time, he's just an advertisement. He's a marketing guy. He's a salesman trying to sell you some commodity. But if he says, wait a second, before we get started, tell me about your situation. Tell me about your family. Tell me about your investments, your income, your expenses. Let me understand who you are before I try to sell you anything, because there are thousands of investments that most advisors can set up for you. But why? How do they choose an investment for you before they've even met you and really, really gotten to know you? So you have to be open to talking with them. That's, by the way, like I mentioned, this free cross-border financial evaluation. You have to be open to talking with us. We need to hear about your situation to evaluate whether we're a good match. But if you find someone who doesn't spend the time to get to know who you are, you're in the wrong place. Then you have to go back and find someone who's really appropriate for you. Okay, we have covered a lot here today on the Goldstein on Gelt show. We've spoken about not only what causes people to feel more stressed in their investing, but why they need to lower their stress, why they need to be calm when handling their investments, because if not, they're going to make bad decisions. I really hope that you'll you'll get a lot of takeaways from this. Feel free to check out the show notes of today's show at goldsteinongelt.com. We're going to put a lot of these points in there. Feel free to be in touch with me if you are living outside the United States and you have U.S. investments and you think you may need help with that. And if you have any questions, you can always go to the Goldstein on Gelt website at goldsteinongelt.com. I want to take a minute to thank my producer, Joseph Goldstein, to thank my chief engineer, Steve Stewart, to thank my executive assistant, Jillian, and to thank you for taking the time to listen to me, Doug Goldstein, here on the Goldstein on Gelt show, the financial show for people living in Israel.